Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future chart on this final trading session of the week. Now the S&P 500 has importantly bounced here during the final trading session of this week, currently trading at 4,351, and it was very important that we bounce today. Reason being is because it looks to me that we've just come off this five-wave structure. We've had, these are the waves that we've seen. And of course, typically followed by that is an ABC correction pattern. And this is something that I did draw a couple of weeks ago. And it's kind of played out here. We've had that ABC correction, which has taken us below the August lows that we achieved back on the 18th. But it was very important that we bounce today due to the fact there was a slight risk that we could have been forming a head and shoulders pattern. This is a pattern that has kind of been progressing under the radar, and we've just completed the right shoulder. But as you can see, it's very important that we break above this low that we achieved back on the 18th of August. And I want to close above it as well, because that would then potentially hint that we have actually had a rejected head and shoulders pattern. And then that would mean one thing, and that's that we are going to go and trade back higher. Are we going to shoot to the moon going into next week? Probably not. The reason being is because we are still trading within the month of September, and September, historically speaking, both in a pre-election year and a normal year, is a very weak month. And this is something that I've been very mindful and focused on for the past couple of months. Literally this has been like a switch. Since the 1st of August, we have just completely fallen here. And, from that 1st of August highs to where we're currently trading right now here in the S&P 500, we're down 5.52%. So we've had a minor correction here. But the good news is that as of October, I am expecting the market to, produce some positive returns, as the majority of investors, this is mostly institutional money, that missed the first half of this year where we rallied over 20% here for the S&P 500, are going to have to play catch up. Otherwise, their clients will go to another fund and invest their money somewhere else. So in my own humble opinion, I do believe that we are setting up very nicely now for a very aggressive rally into year end. I think that this is going to be the last of the real negative volatility that we do see towards the downside. And, sure, if you turn on the media right now, there are lots of worrying headlines, especially surrounding interest rates and the fact that oil is surging higher and we have inflation, etc. But I do believe that as we enter the month of October, we are going to see a lot of the $6.5 trillion that is currently sat on the sidelines put to good work. Now, looking out here at the Nasdaq100, technically speaking, it's a lot better compared to the S&P 500. We didn't actually break below the August 18th lows. I don't know if that means anything with regard to its ABC correction, because anyone who studied this will have to note that your ABC correction, the B to C leg, has to bottom below the A leg, meaning that we need to see a dip below the 18th of August lows like we did here in the S&P 500. So I'm going to continue to monitor this. I think, looking at the Nasdaq 100, it's very important that you focus on the 10-year yield. And, this is an asset that, as a stock trader, you do not want it to continue moving higher. And this is something that I was telling my clients the other day, that one really useful way to look at it is that you just kind of got to pretend that this is a stock. And if this was a stock, you have to ask yourself, would you be buying it right now? And unfortunately, the answer is yes. Technically speaking, this thing is looking unstoppable. We're in a lovely uptrend that we've been in since March 2020. We continue to break out higher and higher here, and at this moment in time, it doesn't really show much signs of peaking. So I think that is definitely something that we do need to see before we start to rally again here for the Nasdaq 100 and also for the S&P 500 and the DowJones30. I don't think that we will be out of the woods, and that we can't trust indice rallies unless we break back below this 4% area. A break back below 4%, and more importantly, a break of this trend. That's when I think that any bounce that does occur here in the broad indices, I think, but that's when you start to trust the bounce. And then just finally, guys, moving over to the DowJones30, we've broken this uptrend, which is rather worrying, but we've gone and hit the 200-day EMA, and we are starting to bounce today. We're up 0.25% here. Dow currently trading at 34,124. I like this. What I would like to see, though, is a break back above and within this uptrend. I think that if we can target the 50-day EMA and break above it, that then offers a fantastic buying opportunity. I've said it before, and I'll say it again. I do believe that the DowJones30 has a very good chance of achieving brand new all-time highs this year as we move our way closer to the end of 2023 into the year of 2024. Of course, the previous all-time high here set back in January 2021. 2022 was all the way up at 36,954, so just shy of 37,000. So we are roughly around 3,000 points off that. But you know, if we can have some technical breakouts towards the upside, that would really spark at the momentum that we need to see us trade back up towards those previous all-time highs. Another thing that I'm looking at is a dollar. You know, the dollar peaked at the end of July, and since that, you know, equities have started to fall. So, you know, we are now hitting an area of resistance here. This is the high that we achieved back on the 8th of March. If this sends the dollar lower, then I think that we could potentially see a small bounce here in the US equity markets, as long as we also see the 10-year bond yield peak as well. But that's it for today's video, guys. If you'd like to join my trading signal group, then make sure you scan this QR code on your screen. It will take you to my website. It's completely free of charge to join my signal group. You'll also receive my daily market research. All you have to do is scan that QR code. It takes 10 seconds. And if you don't enjoy the group, then you can cancel at any time.